Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here's your weekly technical analysis of New York and London coffee markets. I'll start with New York coffee. The conversion at least for the time being, of the November 21 to May 22 head and shoulders top to a head and shoulders continuation pattern has been the main event for this year. But it may be leading to another, larger pattern, one that I will deal with in a little while. Friday 31st of May, that's when the conversion was made, pushing up and closing over the medium moving average, currently 227.20, and into a fairly free area that stretched up to the 2012 high at 241.05. It also made the action of 6 weeks ago a weekly key reversal up and created a smaller reverse head and shoulders pattern for the mid-April to end of May action. This has given a primary target X in the 248.20 area and a secondary target X1 in the 256.15 area. To be honest, I'm not sure whether these targets may be reached in this cycle of the market because there are so many contrary, competing and conflicting patterns here. You see, since the heights of May, prices have set a 2 steps down and 1 step up action, such that last Friday, with a third consecutive major lower high, we had a combined daily key reversal down and bearish engulfing pattern, a clear contradiction to this earlier yet larger pattern. I mentioned last time that the action over late May today has the elements of a lopsided but possible cat's ears pattern. I was and am still not altogether happy with this pattern, which is a derivation of a double top pattern, as the right here is slightly lower than the left. However, this pattern does exist. In fact, all these patterns exist, but we seem not to be creating either a bullish or a bearish incentive with them. Just for good order's sake, we have a potential primary target X2 in the cat's ears pattern in the 201 area, as well as a secondary target X3 in the 196 even area. I would add a heavy dose of it depends to all, and I mean all these potential targets. See, there are two further potential patterns here. One possibly and one under construction. The under construction one is very skewed. The first is to regard the March to date action as a possible reverse head and shoulders pattern in the making. We're constructing what could be a possible right shoulder at this time. The second is the biggest pattern of all. It is to regard the action from mid-November last year until this time as a possible huge lopsided diamond pattern. This was something I suggested needed a lot of pondering upon these past 2 weeks. Now my pondering will continue, as I am still not sure as to the lower upward trend line of this pattern. Is it the one from May, currently at 218.80, or the one made from the April 2021 today action uptrend, currently at 212.90? Like I said, this still requires a lot more pondering. London coffee. As I keep saying each week here, mainly because it still resonates to this day, is that the key difference here seen in London compared to the New York contract is how the peak of the market was back in late December 2021 rather than when New York had it, which was early February 22. This difference has been crucial to the formation of a pattern here in the London contract much earlier compared to the New York contract. We have a November 2021 to February 2022 head and shoulders top. Admittedly, the first shoulder is split, but the action nevertheless stacks up as a legitimate pattern. The neckline, currently 2107 of this is super important, as it resonates as recently as 2 weeks ago when the market moved up and touched it and almost immediately backed off lower. Now, going back a bit to March, the market broke down through the neckline but ended up unable to penetrate the support area underneath that stretches from the 2004 level all the way down to the 1935 area. In early May, prices made a significant attempt lower, making a new low, but one not seen since August 2021. Yet that achievement should be taken with a pinch of salt, as it was only a little lower compared to the low in early March. Nevertheless, it was worth noting that the primary market target for this head and shoulders top had been achieved some while ago. And it was the secondary target that was unabled. And as I've often pointed out, secondary targets are harder to achieve. The key takeaway from all this was not that it had achieved the primary target below, though that was important. It was that this head and shoulders pattern was a topping action, completely different to what we've seen in the New York contract. Since that failed attempt lower back in early May, we have seen the market start to develop not only intraday indecision, such as spinning tops, but also intraday indecision with contrary patterns, one after another. This indecision seems to overall work the market lower, such that last week and today, prices have finally reached the 2004 level and have started tackling it and other supports, initially all the way down to 1968. The question now is roughly the same as it had been in recent weeks. Will we see the market return higher, or will we continue moving in a rectangle pattern, or will we see a break of this, we'll call it a rectangle, but it's moving more to be like a shallow descending wedge pattern. But for now, the rectangle will do. Currently 2000 up to 2142. Which is it going to be? A pullback up, going sideways in the rectangle, or the beginnings of a fresh move lower? Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright Eddie Tofpik and ADM Investor Services International Limited. And here comes the final bit.